Today, we're going to be covering your biggest trading challenges and how to overcome them. So, we're going to be watching this channel here, the One Lance B, but then I'll also give my perspective on some of these trading challenges. And hopefully, you can avoid the Wall Street tuition that I had to pay, where I lost over $200,000 doing everything possible wrong. Once you figure out everything that's possible wrong, all that's left is everything that's possible right. So, let's watch this together, and I'm going to try and help you out as best as I can.
I polled my 100K plus X followers to find the most common constraints holding back your trading, and now I'm sharing how to overcome them. You all really surprised me, so stick around to see what 1 in 4 of you are struggling with. Let's dive into the smallest category first. 5% of traders said they don't know where to start. Well,
I believe that. I believe that. I believe that. I mean, I see that in the Discord, right? Somebody drops in the Discord and they're like, "Where do I even start?" Um, and that's a great point, right? And that was why we created OVTLYR University, which there's a playlist on our channel. Go check it out, OVTLYR University. And I gave away literally everything that I know, every possible thing that I know, and it's 100% free. There is no paywall. It's on YouTube, right? You're not going to find a better deal on the planet for how to trade. Now, the how to start, I could totally see that being an issue for a lot of people. But in reality, right, you've got to, it's like basketball, right? Imagine you want to play basketball. Where do you start? Well, you grab the ball, you throw it in the hole. Okay. You buy a stock, you hope that it goes up, but there's no guarantees in that. Just like there's no guarantees that you're going to throw it in the hole, right? So we need to be realistic here about what our expectations are. I think that is where you need to start, right? Not every time you shoot the ball, even with Michael Jordan, even LeBron, even Steph Curry, every time they shoot the ball, it does not go in the hoop. Same is true in trading. Every time you buy a stock, it does not end up being a winner. A lot of the times it can, but you can have a less than 50% win rate and still make buttloads of money in the market if you understand what you want to do. Exactly. Receipts are on YouTube. Thank you, my friend. Let's keep going.
congrats! You don't know where to start, but you still ended up at the right place. Because between subscribing to this YouTube channel and following me on X, there is already a massive trove of free information for all types of experience levels. As a new trader, one of the first things you want to do is learn about the concept of a trading playbook. I've already made a video.
Trading playbook, like a trading plan, like a trading plan. And that's honestly, that's the right answer, right? Come up with the plan and then start paper trading that plan. You don't have to trade in the market right away. In fact, one of my best stories is when I blew up my account for the second time. I remember driving on the Dallas North Tollway. I'm sitting in the passenger seat, which I never do. This is why it stuck out to me so much. I never do. And my wife is driving. And I'm like, "Hey, listen, I got to tell you, I blew up my account for the second time." I'll never forget where she went. "What did you just say? How could you have done that? Can't you learn to trade with fake money?" It still gives me goosebumps to this day. So yeah, come up with a plan and paper trade that plan, right? It should take you 6 months to a year to figure out what you're doing. I know, I know. Wait. No, Chris. I was promised by all the fake gurus on all the interwebs that I can be a profitable trader day one. I can make $10,000 a day just following their simple one trend line strategy. Really? Do you really think that? You think that a doctor walks into brain surgery and he's like, "I heard from these fake doctor gurus on the internet that I can do brain surgery with just this one simple line"? No. This is the hardest game in the world. And you really think that after watching a couple YouTube videos that you're going to be set? Absolutely not. You need to be practicing. You need to be putting in the work. You need to be figuring out what is and isn't going to work just within your own lifestyle. I've tried day trading. I can't do it. I have so much other things I'd rather do in a day than day trade. But swing trading, about like 20, 30 minutes a day at the most, that fits my lifestyle. I can do that. I can do that for the rest of my life, no issues. You've got to make sure that you come up with a plan, and that plan's not going to be right the first time. I'm going to tell you this right now. That plan is going to be wrong as hell for a while. But then you're going to figure out those things that don't work, and you're going to start focusing on the things that do work, and then you can find success. Now, another thing too is that you will find people on the internet who actually trade, who actually are profitable, who actually have a 44% compound annual growth rate over the last 5 years, and it's up around 50% so far this year. Even with major pullbacks or drawdowns, even with major drawdowns, I'm still up roughly 50% this year. And I put every single one of my trades out on the YouTubes. Every single one. The receipts are on YouTube. Now, if you listen and you focus and you pay attention, you can have great success. I'm here to shortcut that success for you. Like Chris B's talking about here, right? I wasn't profitable until Chris and OVTLYR. Now things feel way less stressful and I'm profitable. Okay. Right. This is not a sales call. Will you be more successful by getting the annual pass at OVTLYR.com for 82 cents a day? Probably, but I can't make that guarantee. Nobody can make that guarantee. We just had somebody the other day say, Chris made me sell my SoFi shares. Chris made me sell my SoFi shares. And you could hear his cries coming through on the chat. You're a big boy. 92% of our audience is men, so I'm going to talk to the men. You're a big boy. Okay, pull up your pants. Take responsibility. But once you get into the market, you really need to figure out what you're doing. All stocks are bad, even SoFi, but every once in a while they act right. And I don't make predictions. I don't want you to make predictions. Predictions are stupid. Nobody can predict the future. All you can do is look at a stock and say objectively, is it trending up? Is it trending down? Do I buy signals? Do I have sell signals? Just go with that, right? We're not saying that every sell signal means it's going to 0. And we're not saying every buy signal is going to 1,000. What a childish thought that would be. There are opportunities. Take the opportunities when they are there. And there are times to sit in cash. And there are times to be defensive. And there are times to be offensive. If you're starting trading, be realistic. That's probably the best way to start. Just be realistic.
On it. And once you're familiar with this concept, what you want to do is use a program like Evernote or Notion and start to catalog different charts and lessons and observations. Yes, trading initially is extremely overwhelming, but taking notes, writing down your questions, and getting everything organized in one place is going to help you make forward progress, even when it doesn't feel like it. The second most popular category, just above 7%, was those that don't know how to find the right stocks to study and watch. You always want to be following what I refer to as in-play stocks. These are stocks that are making standout moves on fresh news or due to extreme technical patterns. One easy way to find many of these is to set up scanning filters and search for stocks that are up the most by percent, down.
Ooh, hang on. That gives me some anxiety. Hang on.
Many of these is to set up scanning filters and search for stocks that are up the most.
This is going to put you in the class of people who chase stocks on FOMO and never make a dime and lose everything. Right? If you are running a screener and you sort it by percent change up, percent change down, you will be the person who gets left behind. I have a slide for this. By the way, Christ follower, what's up, fellow Christ follower? Just started watching Chris this week and it really is amazing. I'm thinking of signing up for it. Listen, don't listen to me. Listen to everybody in the chat. All right. Listen to everybody in the chat, Christ follower. But here's what I want you to do. I want you to look at this chart right here. Okay. Now imagine you sort your stocks based on percentage change. And of course, he's not saying this is the only way to do it. It's a way to do it. You sort by percentage change and you buy right there. Because the herd projection, most people do exactly that. They look at this and they're like, oh, line go up. Line must go up forever. Line go up if I buy. Line go up. Right? We talk like cavemen around here. Oh, wait. Oh, no, line go down. Line go way down. Oh, no, line go down. I sell down here. This is exactly what's going to happen if you start chasing stocks like that. Exactly what's going to happen. Exactly. Now, what would you do instead? I would highly recommend going to OVTLYR.com. I know this is going to sound like a sales pitch, but hear me out. Find something that gives you opportunities before the opportunities have run, right? You don't want to buy the SLE Super League Enterprise stock as it's gone up 159%. You want to be buying it before it does 159%. So I'm just going to pick one at random. I've not looked at this at all. This got a buy signal today, RCKT in the healthcare sector. Now you want to look at it with an extreme level of ownership, and you can say, okay, I understand that 40% of the move of every stock is due to the market, 30% of every stock is due to the sector, and 30% is due to the stock itself, right? And we can see right here, all OVTLYR 9 is lit up. So you know the market's trending in your favor, the breadth is there, the sector is looking beautiful, and then the stock itself is looking beautiful. But you know what? Everything can be there and it can still lose. What? Is Chris spitting facts around here? Oh my gosh, I thought if everything is set up perfectly, that it is a guaranteed winner. Clearly, you've not been in this game for a while. You want to be there when you see the opportunities. You don't want to be there after the opportunities have already happened. And having something in your back pocket like Outlier, I know it sounds like a sales pitch, but I don't care what you do. You do you. You do you, boo. I'm going to continue to use Outlier because it gives me incredible opportunities. But this right here is dangerous. You don't want to be jumping in after it's already had these big old nasty, or not big old nasty, big old amazing moves that you already missed out on.
Most buy percent, down the most buy percent, or doing the highest volume versus their average daily volume. Don't have any of these filters? Don't worry. Once again, I have you covered. On X, for years now, I've been tweeting out what I felt the best trading opportunities were each month. If you do an advanced search for top ops, you'll find all of them. Compile a list of those, save the charts, and try your best to categorize and reverse engineer them for the playbook concept discussed before. Additionally, X is an amazing resource for real-time information on what tickers are most relevant each day. Not only am I often posting about popular charts of the day, but tons of other accounts on there that I frequently repost.
I actually would disagree with that. I would say, because this is exactly what I do, I would say stop following the news and stop following anybody who is like this person here, who's going to be throwing out all kinds of crazy ideas every day, right? First off, he is not your trading plan. Okay, I have a great story for this. So I would encourage you to unfollow everybody that's stock market related. You can unfollow me too. I don't care. Doesn't hurt my feelings. Listen, I got enough money. I could disappear and y'all would never see me again. I choose to do this. I love to do this. This is my favorite game in the world. So when you unfollow everybody, then you can focus in on your plan. Stop following the news. Stop following random people on the internet. But my story with this, the first time I blew up my account was it was on a gold trade, which gold is running like crazy right now, right? Several years ago, gold was trending down. It was the most obvious downtrend of all time. And I know a lot of you guys have heard this before, but some of you haven't. It was the most obvious downtrend of all time. And I was following this random person on Twitter who didn't even have a picture of themselves. It was a picture of a monkey. And I had seen several times that he got things perfectly right. And I was like, whoa, this guy knows what he's talking about. He can predict the future. And he was talking about how gold was hitting generational lows. And if you don't buy it right now, you will regret everything in your life. And I bought every call that was for sale on everything. I bought every call for GLD, GDX, GDXJ, Dust, Nougat, you name it, I bought it. I bought all of it as gold is going down in an obvious downtrend. And this is when I went to Disney World in the meantime, right? This is part of that same story. And I'm watching as my account is evaporating every single day because it's in an obvious downtrend. Like it's not even close. It is the most obvious downtrend of all time. And I'm buying and I'm buying and I'm buying. And then in the meantime, we're going to Disney World. And I remember looking out the window at Disney World and watching this hot air balloon thing that's over at Disney Springs going up and down and thinking to myself, what have I got myself into? I cannot believe that I did this to myself. And I did get monkey hammered. I did get monkey hammered hard. And maybe that's where that came from. But anyway, I remember walking around the Disney World park, my face stuck in my phone because I could not believe how much money I was just watching evaporate out of my account on a daily basis because I followed a random guy on the internet. He was the only plan I had. I had no risk I had no risk management. I had no exit signals. I had no entry signals. It was just a random guy on the internet saying, buy this. It was awful. It was awful. So anyway, I would actually disagree with him completely. Don't follow these people. Don't follow me. Don't follow him. Come up with your own plan and trade that. That way you can take accountability and you don't come back at me and say, Chris told me to myself 5 years. Told me 5 years. Because I'm never right. Here's the deal. I will always be wrong. Every everything you could ever want to know, I'm always wrong. I will always tell you to buy as it's it's already made its move. I'll always tell you to sell, and then it's going to go up after that. So I'm always wrong. Don't listen to me. But if you have your own plan, you don't have to listen to me. Do your own thing.
Posts, like Investors Live, are commenting on the best moving tickers in real time. The third most common segment was almost 8% of traders openly admitting they can't manage risk. That's probably underreported. Truth is, it's higher, and here's why this matters. Risk management means survival. Without
I agree. Risk management is your insurance policy. So how do we, in fact, in the chat, tell me what you would consider risk management. I'll stall slightly because I don't want to give you my answers just yet. But this is something I really struggled with. In fact, this was the hardest hurdle I had to overcome. Was exactly risk management, because let's say you put on a trade. I have a great slide for this, by the way, from Minervini. Knowing you should sell a stock when you buy here and it goes down, but you're afraid to do that because you're afraid it's going to turn around and go up without you. But it's going to get you caught in this mess, which is exactly what happened to me over and over and over and over. Now, how do you define your risk? Know where you're going to get out before you get in is exactly right, Cody. Exactly right, Cody. Well, let's expand upon that. That's one part, right? Position sizing. Position sizing to the amount of risk you're willing to take, right? We're not looking at this and saying, you know what? I can't go wrong. Let's just do the whole thing. No. All stocks are bad, but only every once in a while they act right. Only every once in a while they act right. And even when they're acting right, they can still go wrong. Okay. You have to plan on your plan, not going to plan. That's something I picked up from this book here. This book here, The Psychology of Money. You have to plan on your plan, not going to plan. Well, if you're not going to lose, why would you ever have to position size? But you're totally right. That's exactly right. And then having your defined exit point. Exactly. Knowing where you will know this isn't working. This is not working. Now, that's going to be different for everybody. Some people say, 2%. Some people say 2 ATR. Some people say all kinds of different things. The point here is you need to figure out for you and your own plan how much risk you're willing to take. Don't take my risk. Look at me in the eyes. Do not take my risk. You need to figure out what's right for you.
Without it, even the best edge is worthless. Multiple times per year, I have traders reach out to me because they made huge sums of money but never learned proper risk management and then went on to lose it all. By the time they contact me,
yeah, we totally should have done bingo on this. This would be a blackout.
the damage has already been done. If you take nothing else from this video, remember this. Every single trader needs a daily max loss limit, ideally instituted on the broker side to prevent you.
So I don't know if you're familiar with that, but a lot of day traders, which I am not, don't want to be. I would not consider myself. I'm a fund manager, right? And that fund manager takes opportunities when they are there and doesn't do anything when there's nothing to do. You need to treat your portfolio in the same way. If there is an entry signal or an exit signal, you're obligated to take that on the day that it shows up. Elsewise, don't do anything. Okay. So a day trader is going to set maximum loss limits. Okay. I don't think that necessarily applies to swing traders because we're not trying to force trades. And that's one of the reasons that a lot of traders fail. 90% of traders lose 90% of their accounts the first 90 days of trading because they force trades, because they're like, everybody else is making $10,000 a day. Why can't I make $10,000 a day? If I just take this one more trade, I'm going to get there. And then they go on tilt and then they make all kinds of mistakes. And to this point, I don't recommend you ever trying to hit a certain monthly nut. That's what I've heard it called. Ever. Let's say your monthly nut is $10,000. Okay. Like there's going to be days where you make $10,000 in a single day. I've done it many times. Then there's going to be days where you lose $10,000 in a single day. I've done that too. But by saying, I must achieve this outcome by this date, you're asking the market to work for you, okay? And here's the deal. The market doesn't give two monkey donkeys about who you are, does not care about what you need if you need to make your mortgage, the market's like, I don't care. I'm gonna do what I'm gonna do. There will be times to be very aggressive, then there will be times to be very defensive, right? We want to have our portfolio stair stepping up, but we don't want to be forcing trades, which are going to cause us to mess up our account because we feel that we have this pressure to achieve a certain outcome by a certain time. So I actually posted this in the Discord. Somebody asked, in fact, I'll go to that post real quick. I think this is a really good lesson for everyone. Hold tight. It was from me here. It was, I think it was last night. Here. Okay. So Kostya says, how big of an account do you need to quit your job and be a full-time fund manager? So I wrote back, well, that depends on your tolerance for accepting that you can't control your paydays. This is really important. You are not in control of when you get your paydays. The distribution of wins and losses will be random throughout the year. There will be times where you make a ton of money all at once, like we did in May. And then there will be times where you go 4 months and nothing's happening. And then there will be times where you make a ton of money again. And then there will be 2 months where nothing's happening. Okay. In the meantime, don't F up your account. Now, I also want to give some perspective here. So for example, in my account, and of course, scale it to whatever it is, as an example, if I had 180K to start with, I took enough profits to take out $100,000 this year. Right. So scale that to whatever you have. That's what I'm trying to say here. So you really don't need as much as you think, at least if you're an outlier. Okay. Starting with 180 and being able to still pull out 100, for a lot of people, that's their goal, 100K a year. Yet, and this is my experience, all the trades are on YouTube, by the way. I'm not saying that those are my numbers. What I'm trying to do is give you perspective. Run your math. It isn't as much as you think. So Kostya, and for everybody else out there, you can be a full-time fund manager if you understand how to control your risk.
You from being your own worst enemy. Additionally, every single trader should have a series of rules about how much they're willing to lose over different segments of time before they pause their trading until they've identified the issue, stabilize themselves mentally, and are ready to repair the damage. How much are you willing to lose in a week? How much are you willing to give back over a month? If you
Again, these are day trading type principles. I want to skip forward because I don't want you to ever feel like you need to have a time limit, a time-based income an income scenario. A time-based income scenario in the stock market will absolutely jack everything that you need up, right? So for example, Don's talking about the 10 under 20 price under 50 or 10 over 20 price over 50. Let's say that you needed to make your money from earlier this year, February until, so February 24th across under until May, let's say May 5th. So basically you're good with like 3 months of not making any money. Well, if you're a swing trader and you understand how the principles work, yes, I am totally content with not making any money for 3 months because I don't need the market to pay me, because I know at some point, like in May, my account went up like 30% in the span of 4 days because I was waiting patiently and I didn't F up my account all the way down. Thanks, Viet. Says the biggest difference between Chris and other YouTube traders is his trades are documented. No hype, no BS. Exactly. I'm not trying to predict anything, and I don't want you to predict anything either. But if you're trying to time base when you get paid, you're going to jack up your account. And I don't want that to happen to you. We're going to skip forward here.
10% were traders who are struggling to find edge or a functional strategy. Finding edge, in my opinion, is the hardest part of trading. People copy random strategies off X, YouTube.
Didn't he just say back over here, go listen to random people on the internet? And now he's saying, don't listen to random people on the internet. He literally just said that. We're going to skip this one. Pattern day trading rules, that shouldn't be an issue for you. Pattern day trading rules happen when you're under $25,000. I'm not saying you don't have $25,000. What I'm trying to say is that if you are a swing trader, a profitable swing trader, this will never apply to you. Time constraints. Okay.
This speaks to just how many traders are pursuing this part-time. There is nothing wrong with that. However, you need to recognize how long and steep the learning curve will take while doing this part-time. My advice to you all is this. First, decide how seriously you want to take this pursuit.
I agree with that. Right now, my numbers I've always said is that year one, if you can not blow up your account year one, you're doing great. Now, what I'd like you to do is in the chat, and I'll feature you right here, is how has your trading been since listening to what we talk about here? Year one, if you can not blow up your account, you are in the top 10% of traders, literally 90, 90, 90. We already talked about that. Year two, if you can get to break even on year two, that is a huge, tremendous win. Year three, if you can repeat the success of year two at just break even, you are in the top echelon of traders. Only in year four could you actually look at being profitable. Now, that's for normal people. That's for normal people. Tell me in the chat how trading has been for you. Because what I've seen is that a lot of really smart people watch this channel. And those really smart people have shown how they've been unprofitable, started watching what we talk about, and have immediately turned things around. Daz is up 50% in 6 months with OVTLYR. Daz, that's not normal, okay? That is super not normal. Dr. J, what about profitable within 1 year? That's him because of OVTLYR. Vincent says second year, 36%. And he's been following Chris most of this year. Outstanding. That's not normal, Vincent. Outstanding. Let's see. Still in year one and always above break even. Ozzy Ian, a OVTLYR University graduate, of course. Steven says trading is excellent for him right now. 10 over 20 or price over 50 has been a game changer. Nakanobos. Obos. Listen, I'm from Texas. I'm doing my best here. Thanks, mate, for staying connected to reality in the face of not normal returns. Exactly. Richard says is improved by thousands. Steve says rewarding finally. David says he just joined OVTLYR, but he's up 39%. And that's what we're talking about, right? Started in February, met OVTLYR in April, and he's up 23%. That's FactLab. This is unusual. This is super not normal. Okay. But it's because you guys are smart and you're paying attention and you're taking notes and you are actually making a difference and saying that this is not a hobby, right? This is not a hobby. A hobby is collecting Scrooge McDuck memorabilia, right? You go on eBay and you're like, oh, wow, cool. A Scrooge clock that's a bank at the same time. $35. Yeah, let's go. That's a hobby, right? Buying fancy watches. That's a hobby. Trading is not. And if you treat it as a hobby, you will get wrecked. You will get monkey hammered to death. But if you treat it as if this is your new career as a fund manager, everything will change for you. Everything will change for you.
There is absolutely nothing wrong with trading being a hobby. You can always take it more seriously in the future. But if for now trading is just a hobby, don't feel guilty over it. Work when you can, enjoy it while you do, and make the process fun. If on the other hand, you want to aggressively pursue this, figure out what amount of time each day or week you can put into trading on a consistent basis. Make that time sacred and treat it like a second job. Make sure during that time you are 100% productive and focused. You still want to make sure you do reviews and write-ups of your trades. Use weekends for deep work. No cell phone, no internet surfing, no distractions. You need all of your time devoted to trading to be as productive as possible. The next biggest segment of data, 17% of responses, were issues sizing up. Part of this, of course, has to cite.
I'm glad you mentioned that. So my size is 7%, which I'm actually going to back down to 6%. We did the Kelly criterion, and we're going to use quarter Kelly size at 6%. I think it's like 6.25. But I think I'm just going to run it at 6%. Now, what does that mean? That means on any one trade in particular, I'm willing to risk 6% of my account. That's actually huge. It's enormous. It doesn't sound like much, but it is. And that's not position size. These position sizes can range for anywhere from 12% to 20% of my portfolio in a single stock. But the risk that I'm willing to take is around 6% or less. Okay. Now, There was a an OVTLYR University student who was very profitable at 1% risk. And he's like, okay, I get it. Everything's flowing. I'm going to size up. I'm going to go to 5. I think 5 is a good place to be once you're profitable. And then on his first trade at 5%, he happened to lose. He did nothing wrong. He followed his plan to a T. But on the very first one, it happened to be a loser, and it gave back all of the gains he made at 1%. Now, had he not sized up for that particular one trade, then it wouldn't have impacted him. But because that one particular trade actually happened to be a loser, the 5% happened to be a loser, it wiped out his gains. So that was a great lesson. And I hate that he had to learn it like that, but it's a great lesson of sizing into the 5%, right? So be profitable for a few months at 1%, profitable for a few months at 2.5%, profitable for a few months at 4%, and then maybe profitable at 5%, right? You got to get used to the size, but sizing up is a real thing, but you got to get used to it. Okay? You got to get used to it, because that first $30,000 loss day hurts a hell of a lot more than that first $30,000 win day.
Psychological component, but I wanted to dissect this topic separately. Many stated that they had issues sizing up due to being afraid of taking bigger losses. Others said they don't
That's what I'm talking. I just said that.
know how much or when to size up. Here's my general advice for this subject. A trader should only size up once they have a track record of the following. Positive expected value, meaning the trader is making P&L over a period of weeks or months.
Yeah, like I was just saying, right? Be profitable at 1%, then 2.5, and then maybe 4, and then 5. You got to grow slowly. Exactly. Now, a lot of people, Ian, they can't do that. They're like, but I need the dollars. Don't you understand, Ian? I need to get paid. I get that. That's why we're here all in the first place, is to get paid. But if you don't know what you're doing, it's going to hurt. It's going to hurt real bad.
Ability to consistently follow their trade rules. And finally, they consistently follow their risk management rules. With at least a few weeks of data showing you have the ability to do the above, it can be time to start sizing up. Now, here is where most people go wrong, especially in the beginning before they've gained experience handling drawdowns. You want to size up far more gradually than most expect. So when one commenter stated that he was afraid of taking bigger losses, my rebuttal would be twofold. First, risk is an inevitable part of trading. You can't ever have bigger winners without taking bigger losses over time. To grow as a trader, we must accept and internalize that risk and recognize that we will have bigger losses. But second, and more importantly, that trader was likely thinking of sizing up too aggressively at once, and that is why he was scared. We often only want to size up 10% or even 20% more at a time. Then we want to build our comfort level at that new sizing amount. The analogy I give is like that of one working out at a gym. The fastest way to grow your strength at the gym isn't by lifting as much
Bro, that dude is jacked. Are those 45s? That's like 1,000 pounds.
as possible and getting injured. Instead, it is by gradually and consistently increasing weight over time, while minimizing chances of injury that will set you back. Trading is no different. One simple heuristic I use is to never risk an amount that, if lost, will damage your psychology. Most traders greatly underestimate how much their sizing will increase over the course of a year if they simply increase their risk by 10 or 20% at a time until they are comfortable with the new level. One trick I like to use to do this is what I call the sizing note card. I would have a note card at my desk, and on it, I would write how much I wanted to risk for each category of trade. Predetermining these values would minimize the amount of processing I needed to do mid-trade, and also give me a clear, objective way to measure whether I sized the trade appropriately based on the modest growth amount I was aiming for. Over time, you gradually increase your risk amounts once the higher levels become the norm. So let's finally dive into the most common category of trader constraints, psychology, which has a whopping 25.
Dude, legit. That is right. It's all the hardest part of trading is the game between your ears. Absolutely is the game between your ears. Now, I worked with a trading psychologist for I think it was about 3 years. And there were several things that we talked about. And one of them was having personal agency, right? Personal agency, meaning I did this. I did this. I pushed that button, right? I can't go around saying, Chris made me steal my SoFi shares. No, I did this. I did this to myself. Because I did this, That gives me personal agency to say, I can undo this. Ooh, there's a concept, right? Because I'm not going to take a trade unless it matches what I have determined is setting an appropriate risk for what I am comfortable with. So therefore, I am in control of the trade. I control when I get in. I control when I get out. I cannot control the movements of the market. That's something else we worked on, right? It feels like we have a locus of control by having all of our signals, by having all the data at our backs, right? But at the end of the day, once we're in the trade, the market will move in a direction that we cannot choose. The only thing that we can do, the only thing that we can choose is when we get in, when we get out, and with how much size. The rest of it, once you're in the trade, the rest of it is just determined by the market. Now, you can, of course, go with the trends, make your life a lot easier, or you can try and say, I know when this trend is going to reverse and make your life a living hell. And so you've got to make sure that you are following your plan because nobody else is going to be clicking those buttons. There's nobody sitting on your shoulder, no little devil sitting on your shoulder saying, hey, 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 buy this. Oh, buy this real quick. Buy it. Buy it. It's going to go up, right? No. You need to have that accountability for yourself.
5% response rate. 1 in 4 traders said psychology is their #1 obstacle. That's huge. Some of the issues mentioned included hesitation pulling the trigger, hesitating when it's time to size up, cutting winners too early, letting losers run, or just plain tilt trading after a bad beat. But
Dude, and yeah, that guy last week, goodness gravy. It's got me worked up because I didn't realize that there are actual babies in the audience, right? People who are still in diapers, people who still walk around saying, I can't do anything on my own. I need to listen to random guy on the internet. Random guy on the internet will make me monies. Really? Random guy on the internet told me to sell my shares, and I did, no, it don't. Oh, be grown-ups here. Have a plan, execute that plan.
because these are different issues, I'm going to break some of them down separately. The bulk of these issues, while they seem psychological in nature, they really stem from not having done a lot of the hard work building your trading system. I can tell that a lot of these traders don't have a playbook and they haven't spent the time to predefine their entries, their exits, and their sizing. The reason why most people are hesitating or freezing up
And,
is
and right there, predefine your entries, exit, and sizing are three characteristics of a professional fund manager, right? If you can't predefine your entries, your exits, and your sizing, stop doing what you're doing. Come up with a plan to where you can do exactly that. Predefine your entries, exits, and sizing. Okay. This is a must do. Like this is not like, oh, it's a Thursday, I need to buy something. A lot of people act that way, but not fund managers. You are a fund manager. Stop treating this like a hobby. Start treating this like the most lucrative career in the world.
because they're relying on too much subjectivity in the moment. A good trading playbook has you list out your plays. It includes all the qualities you look for in a stock, it has your entry rules, it has your exit rules, and it has your sizing rules.
Dude, this is what you must have.
Trading in real time has so much information being thrown at us all at once. It's easily overwhelming. That is why you want to reduce those decisions as much as possible. You want predefined game plans. If X happens,
Now, this is why I was so adamant to build in a full slide deck with all my exit signals, with all of my entry criterias, right? And now I've shared this with you as well. You go into our Discord, you go to the FAQ and member contributions, and you can get the full PowerPoint right here in Google Slides. Boom, right there. Makes it super easy. All you need, all in one place. Now, I'm not saying you have to follow it, but we have a full team of people with the sole purpose of making the most profitable plans possible. The sole purpose, right? My objective is to win the US Investing Championship next year. 2026, we are going to win the US Investing Championship following those plans that I'm sharing with you. And every single trade will be shown here on YouTube. The receipts will be unavoidable as we win, as we follow a plan, a predefined game plan.
I will do Y. On this type of setup, I'll risk $100. On that type of setup, I'll risk $200. Build the system and rules beforehand so that you reduce as much of the decision making in the moment as possible. The reason I've made over $100 million in verified profits is because I've spent the time and energy building a good trading playbook. As a side note, it always bothers me when I see people say they need to cut their losers faster, or they need to hold on to their winners longer. Those statements tell me one thing: you don't have predefined
That's exactly what I was thinking. You don't even know where your exits are. If you really feel that way, you never had an exit plan in the first place.
exit rules. It's not about hindsight bias and magically hoping you hold on longer to the stocks that kept going. The bigger question is, did you cut your losses at your stop, and did you take profits in a way that followed your rules? If so, then great. There will always be trades that keep working. Our point isn't to be perfect and catch the whole move. That's impossible in markets. The point of having a trading system is to backtest various rules and then find the decision that works best in the aggregate. Now, let's say you've done all that. You have your defined rules, yet you're still hesitating. Often this can come from a lack of confidence or that we are too emotionally attached to the outcome. We are afraid.
Yes. Yes. Okay. Emotionally attached to the outcome is so important. I have a slide for that. It's almost like I'm a professional fund manager and I keep track of this stuff. There are no expectations for the outcome of any trade. No expectations on the outcome of any trade. Now, I know what you're thinking. I know exactly what you're thinking is, why would I put the trade on if I don't think I'm going to win? Right? You need to treat your account like a fund manager and know exactly where you're going to get out before getting in. And you just have a plan to get out when one of those exit signals is hit. Now, the distribution of wins and losses is random. It is random. I would love to tell you you're going to have 28 wins in a row, followed by 4 losses, followed by 27 wins in a row, followed by 3 losses. That is an impossible thing to do. An impossible thing to do. You cannot be emotionally involved on the outcome of any one trade, because we're not here to make one trade a year, are we? No. We're here to take every opportunity that is given to us. And once we understand that the opportunities will come, then there will be times to be defensive and not do anything. And then more opportunities will come. We stop treating every individual trade as if it's life or death. Now, I'll be honest, and you guys have seen on Discord, anytime it doesn't go vertical, people start acting up. Anytime you put on a trade and it doesn't immediately go to $1,000 a share, people start acting up. And it's because they have that emotional desire, rather than saying, I have to make $1,000 a share on this trade so I can get to, pay my mortgage, versus I don't know what's going to happen, but I have a plan to get in and out. And based on the math, there's no more trust me bros. Based on the math, let's go to plan M's back testing right here. Based on the math, over 7,000 trades, the average holding period was 17 and a half days, with a 57-ish% win rate and a 2.25% average return overall. Okay. In 93 trading days. That's it. 93 trading days. Why is it going down? Yes, exactly. Having this in your back pocket, being able to pull it out at any time and say, oh, this is my plan. Do you see what happens right here on this part of the plan? Hang on, let me zoom in a little bit more. See what happens on this part of the plan? 44% of the time, you take a loss. And the average loss is 4.4% on the stock price. But the average win happens 56.9% of the time, and it's 7.27% on the stock. You have to plan on your plan not going to plan. Elsewise, you don't have a plan. You must have a plan. And you have to follow that plan. And that's the hard part here, right? That trading psychology aspect is incredibly hard. Now, I want you to be successful in trading. And I want you to understand that you can be very successful in trading, incredibly successful in trading, but you can't do it by rushing. You have to take your time. You have to make sure that you understand why you do the things that you do for entries and why you do the things that you do for exits. And like I say, I am planning to win the US Investing Championship for 2026. And you can follow along with every single trade the moment that I put it on for just 82 cents a day. You're going to get all the data in Outlier and be able to see every trade that I put on the moment I put it on when you go over to outlier.com and grab the annual pass. But in the meantime, if you need any more convincing how amazing we are changing people's lives, I recommend you save time, make money, and start winning with less risk by clicking one of these two videos. We'll talk soon.